Welcome back to the Rebel's Edge, where it's AI all day, all night, all the time. How do I know? Well, because Nvidia is now the biggest stock in the world, and two other AI related stocks are also running to the upside. You want to know why? Stay tuned to the Rebel's Edge. Bang! Welcome back, everybody. I'm John Najarian. He is Pete Najarian, and this is the Rebel's Edge. And Pete, just as I said in that cold open, if it's a day that ends in day, which, by the way, most days do, NVIDIA is moving to the upside, and it's dragging any AI-related stock with it.
It's unbelievable, John. I mean, it's one of the things, and I know you'll be talking about it. You're going to be doing a few appearances in the next couple of days, and I was just on yesterday, during Juneteenth there with Liz Clayman. And what did we talk about? Well, exactly what we're going to be talking even more about now, which is AI. And when you talk about AI, it always starts with NVIDIA. But they're not the only one, John.
Nope, not the only one. And as you told Maria, since Pete kind of bounces back and forth on Fox Business, as he told Maria last week, very power hungry. AI is, folks, and that will continue to be a big story. But we've got a lot to talk about today, so let's open it up with Macro Minute, Pete, and say that U.S. unemployment claims remained close to a 10-month high. Now, they're above expectations for mid-June, but the Philadelphia Fed Manufacturing Index also showed signs of a slowing economy. Oh, really? You mean the economy that they tell us is booming, Pete? Really? Well, what do you got for macro today?
Well, the one thing I do lean on is Powell, and Powell's not a complete fool by any stretch, I don't think, and I know you don't think so either. This guy is smart as they come. He came from the financial world. He talked about something, and I like the way he phrased it, John, which was gradual cooling. So in other words, he's not saying that the economy is booming. He's saying, you know what? There is something going on, and it's cooling off, and they're still waiting, and they're patiently waiting for this inflation. We'll see, John. He actually, when he came out, he said, well, there's a possibility of possibly one cut. And you know what? When they got their reasons for that type of thing, it makes total sense to me at this point. But too many people were saying 6 cuts, John, 7 cuts, and a lot of those guys are eating some bad-looking crow right now.
Yeah, eating some crow and probably losing a lot of money in the market as well, Pete. Yes. All right. Let's talk about crude oil for fantastic futures. Why are we talking about crude oil? Well, because we talked about
fantastic futures.
And this would be the second week in a row, Pete, that we've seen a pretty nice upside move out of crude oil, which again, ain't what you want to see really, folks. None of us want to see that going into the 4th of July because that's peak summer driving usually. Yeah. And the energy that Pete talked about for AI, well, I'm not saying it's developed by diesel or gasoline, Pete, but it certainly is trucked around a lot by big diesel trucks. And I think whether you're talking coal being delivered by trains or diesel, you're talking about energy, and energy prices are going up again.
They certainly are, and I'm glad you pointed it out. I mean, the fact that we got over $82 today for crude oil when we had such a difficult time even getting to 80, John. I mean, we were in the mid to upper 70s for a while. We've broached through 80 and then pulled back, and then gotten up there and pulled back. And now it's a little bit longer, the extension of where we are above 80, starting to feel like maybe it's a little bit stickier, and 82 being a pretty interesting number. I'd also like to point out the volatility index. We keep going there, John, for all the right reasons. And I love that Liz Clayman actually brought this up as well, because as we look at the volatility index itself, and there we are in the 12s, we do get a little bit above that. We'll get into the very, very low 13s. We also get in the upper 11s, but we're in the 12s, and it's a very, very tight bracket, it seems like right now. that is a good time to start deciding whether or not you might want to protect something at record high levels. Would you want to protect it? And I looked at her and I said, absolutely. Buying puts to protect would make a heck of a lot of sense.
Yep. Buy when you can, not when you have to. Do a little hedging, folks. It's not a bad idea. But you need to understand about options before you do it, which is why, of course, we have this book. It's not an option. And if you go there, you can claim that book, folks, by going to itsnotanoption.com. That's itsnotanoption.com. All right, Pete, that's enough of the fantastic futures, but we've got a return visitor to the small cap spotlight. It is Biolargo, a company that creates and commercializes sustainable technologies for everything from pet odors, Pete, to water purification. And they have yet another announced contract with the United States Air Force. So Biolargo, BLGO. We are paid consultants to Biolargo. I am also a shareholder of Biolargo. And Pete, these guys, we talked before about some of the things they do with Poof, which is their pet odor eliminator, which is extremely popular and it runs on infomercials across all the United States. But this particular thing, Pete, is clean air. And obviously an important thing to have clean air and or to clean up air that would otherwise be polluted. Well, the U.S. Air Force in Arizona has signed up for 2 more Air Force bases to be part of the Biolargo team. And it's a 4-year contract. It's worth about $800,000 per year annually. And this is on top of the 3 Air Force bases that they already had and already collecting revenue from in New Mexico. So we like to have small cap spotlight shine the light on great new companies with emerging tech. This is certainly one of them, Biolargo. They have sodium batteries. They have basically a wound healing device, Pete, that people go in for various types of, sounds like the dogs like it too.
Yeah,
See, that's the pet odor eliminator, Pete. Yeah. Tell that dog we're going to get some pet odor elimination headed his way. But Biolargo does all of that stuff, folks. And this is some pretty good news for Biolargo that they got these 2 new contracts in Arizona. So that with you guys. Apparently that dog loves Biolargo.
That dog really loves Biolargo, Joe.
Well, Biolargo spotlight, and don't forget about how much those dogs love Biolargo and the pet odor eliminator. All right, Poof. Let's talk now, Pete, about Nvidia, because you remember when you and I were on CNBC, Pete, and a bunch of people kept saying, what about the law of large numbers? Because Apple was about to trade $1 trillion. Well, since then, Apple has traded $2 trillion and then $3 trillion. And I guess they've given up on that law of large numbers because, by the way, folks, it had absolutely zero to do with stock prices. There is no such thing in an application to stock prices. The law of large numbers is something completely different that a bunch of yahoos that don't understand what's going on in the markets like to cite, but it has nothing to do. But, Pete, now the law of large numbers would apply to Nvidia because it is now $3.3 trillion. Is the biggest company on earth. They passed Microsoft. They already passed Apple. Now they passed Microsoft. And they've got some pretty good news. We'll cover it in our segment on Dell and Supermicro. But boy, they got some really good news from Elon Musk, didn't they, Pete?
They sure did. And, you know, John, it's certainly been the biggest catalyst that I've seen in a really long time. And it's absolutely been incredible. We've watched this stock make some of these moves. The 10-for-1 split certainly didn't hurt, I don't think, at all. A lot of people said, well, Once you do that split, though, they tend to go down. First of all, I'm not so sure that's really the tendency, number one. Number two, it has opened up for a lot more folks. And we're watching it right now do exactly the opposite of what so many people said going down. This is a stock that just keeps going to new 52-week highs. It almost feels like on a regular basis, on a daily basis. So today we got over 140. We dang near got 141. We'll see as the day progresses. Obviously, it's not going to always be up there. It's not always going to be in positive territory, but it certainly is something that we're seeing as one of the biggest catalysts, John, in the markets that I can remember. And certainly this is the leader. It's not the only thing that's part of the AI world, but absolutely Nvidia is a leader in AI.
Yeah. And we might as well dive into the next AI related stock, I guess, Pete, Accenture. And I know a lot of you are thinking, Accenture, that's kind of like consulting and stuff, isn't it? It spun off out of Arthur Andersen, and wouldn't they be a lot of consulting and so forth? The answer is yes. But their bookings for AI growth are through the roof, Pete. So the reason this stock is moving up today isn't the earnings, which were just okay. In fact, they missed a little, Pete, on, for instance, profit per share, the earnings, if you will, not the sales. But what they did have was a massive amount of their customers that wanted help with AI. So Accenture, being one of those firms that sort of like McKinsey and a bunch of others, help people get started and help them maintain with a consultancy and so forth. That's huge and apparently driving revenue big for ACN, Pete.
It is amazing, John, and you're exactly right. I mean, they're talking about just the AI portion of this being 900 million in the quarter, 2 billion as far as the fiscal year to date. I mean, those are pretty unbelievable numbers when you hear them, but they are believable because that's what they're doing. And when you look, John, at the balance sheet here, okay, you got 2 billion in cash over debt. That's pretty impressive. But on top of that, how about a free cash flow of about $8.5 billion? When you put all of this together, you look at this stock and it's actually well below its 52-week highs. I think it's trading on the cheap. I'm not saying I'm buying it today, but I'm certainly looking at it because I look at it as something that's trading at a PE of a 21. And with the potential growth of AI, as you're just describing to people, this one's definitely worth a long look to see exactly how big this could really be.
Yeah. And like I said, you look at any of these consultancies, Pete, and obviously IBM's got some consultants as well as part of it. And that was always a big part of their strategy. Well, now you've got a lot of these firms that are being asked by their very largest customers, hey, we need a little more help with AI here. Send us a few of your consultants to help us employ some AI strategies and so forth. And 900 mil, that's nothing to sneeze at, Pete. Pretty close to $1 billion right there. All right. What about Dell and Supermicro, or SMCI? These are two, Pete, that Elon Musk talked about because he said, you know what? When I'm basically out here doing XAI, which is another company, like Elon doesn't have enough companies, Pete. XAI is going to be a supercomputer company run by Mr. Musk. Well, he's saying Dell is assembling half the racks that are going into these supercomputer that XAI is building, and Dell and Supermicro are both going to be a big part of what we're doing going forward. You remember what happened, Pete, when he said, I'm going to buy 100,000 of those $40,000 chips from Nvidia? The stock just to the upside. Same thing going on here with Dell and Supermicro.
Yeah, it's incredible. And he talked about, building out, the buildings that they're going to do, John Musk is going to do. It's going to be in Buffalo. It's going to be in Austin. And they're doing all of this. I think that's where, we talked about NVIDIA just a little bit ago, but it's not just about NVIDIA. We've got we've got the server side. We've got the memory side. We've got a lot of different pieces to the puzzle. Western Digital's a part of this. Micron's a part of this. Seagate's a part of this. Hewlett Packard's part of this whole thing. And then, of course, Dell and Supermicro. it's just amazing, John. And like we said, it isn't just one name. One name is definitely a monstrous catalyst. We all know that. But there are multiple other pieces to this puzzle. And I think by highlighting this, at least people should be taking a look at, all right, who does the servers? Where are the memory coming from? Where are we doing this? And that's why we are seeing a little bit more broad than just one single name. I mean, you can bring up Oracle. Everybody talks about AI and what their contribution is. And I think it's been absolutely spectacular to watch how this has gone. And Dell, a company that we look at more like an old school IBM, Dell's a part of this as well, John.
Yep, Dell sure is, Pete. And the stock got hit earlier this week. Well, on just a couple sentences from Elon Musk, the stock rocks higher by 5%. All right, now let's talk about a company that sort of competes with Elon Musk, Pete, since he's all over everything we're talking about today. That's Nikola, because Elon Musk decided, hey, you know what, Tesla, that's a great name. The scientist or the inventor who was famed for making crazy futuristic devices 100 years ago, his name was Nikola Tesla. Well, so the other EV company decided, well, it worked so well for Mr. Musk. Let me slap Nikola's name on here. So they did. But the problem is, Pete, that they haven't been making money and they're losing money hand over fist on their vehicles. And now the board has just approved a minimum of a 1-for-10 reverse stock split. So instead of having more shares at a lower price, they're going to have fewer shares at a higher price. In other words, you're playing games so that you can stay listed on the big board and on the NASDAQ, because when you're trading for 37 cents, which is where this stock is now, Pete, you're going to get cut. You have like 30 days to do something or you're off. And these guys are basically saying somewhere between 1-for-10 and 1-for-30, we're doing a reverse split.
And the reverse split board has decided, hey, you know what? We can approve this whole 1-for-30. I mean, John, these guys have done nothing right this entire time. And we're talking about, the big tractor type, the monstrous engines that it takes and everything else that goes along with it. But how about this, John? 2020, it's a $64 stock. 21, it's a $12 stock. 22, it's a $10 stock. 23, it's under $3. This year, it's under a buck the entire year. I mean, they have problems. And when I say problems, they have massive problems. And when you look at where they are on the balance sheet, you talked about it, but the cash burn right now is close to 340, maybe $350 million, John. That's the cash burn. You know how much cash they've got over debt? 70 million. So they've got some issues, and there's a really good reason why this stock has an 18% short. It makes total sense. Matter of fact, I'm surprised the short isn't even bigger than that, quite frankly, because when you look at how much of a struggle it's been, and we just upper left to lower right is not the direction you want your stock to go, but that's exactly where this stock has been going.
Yeah, it's sad, but there are a bunch of companies that, Pete, have good technology and make attractive vehicles that people would buy. But they have to be able to make a profit on those vehicles one way or another, or they're not going to be around for long. And we have seen the trash heap get bigger and bigger of companies that are failing to get out there and get to that break even for EVs and so forth. Pretty sad.
Yeah.
All right. Well, it's that time of day, Pete, for sports.
Yeah.
And I know you're always passionate about sports. And one factor in particular really has your underwear in a bundle in it.
Well, here's why my underwear isn't a bit of a bundle, John. This whole world of NIL, name, image, likeness, for those people that don't really understand, where it's coming from, but they are essentially figured out a way in college football, college sports, but specifically football in this case, where, you know what, we're going to pay you guys something. We're going to give you money on top of your scholarship and everything else, which they didn't really think this thing through very well, John. But there's a kid out there right now named Dia Bell. Okay. His father played in the NBA for many, many years, was a very good player, not a star, but it's certainly a really good player. Well, this kid's coming out of the state of Florida. He's a quarterback, and the University of Texas gave him this offer. By the way, he's a junior in high school. This is for the class of 2026. So this kid's got an NIL deal for not bad, $9.2 million this kid's going to get. Yes, $9.2 million. Now, here's how it breaks down. When he signs the contract to go to the University of Texas, he gets $2 million right then and there. After that, John, he gets $1.6 million for every year that he's at Texas. Okay? I mean, so you add the whole thing up. Here we go. 9.2 million, 6'3" kids, got a cannon for an arm. Oh, by the way, they've already got a kid that they're paying a lot of money by the name of Quinn Ewers. And he's about done. He'll probably come out after this year. And after that, you're going to get Arch Manning, who's making a boatload of money himself. And then he'll be there for probably just 1 year, John, maybe 2. He's gone. And that's when Diabell's going to step in. What needs to happen is somebody's got to step in and say, hey, look, this has gotten out of control. There's got to be some sort of limits. This is not professional sports. This is still amateur sports. I don't mind the style of going out there and trying to figure out how the players as a group should be able to get some sort of money, some cut into what's going on in college sports. But John, I think this has gotten really way out of hand. How about you? And what do you think? And do you got any answers? I'm not saying I got the answers, but there's got to be something that's going to be fair for the players and also fair for the university and also trying to keep it as close to amateur athletics as we can.
I think that ship has sailed, Pete, the amateur side. Some of these programs, and even some big name ones. I'm not going to try to go through them all, but some of the big name programs, Pete, have had boosters, if you will. That's what they used to call them. Now I guess you call them sponsors, maybe even. Yeah. But, they gather some money from these sponsors, boosters, whatever, and they can do what they couldn't do before, which is pay these athletes. And when you're going after, a kid that 40 schools want this kid, obviously, 6'3", coming into his junior year. He's got, like Pete said, 2 more years before he competes for a job at the college level. And somebody's going to offer him $9 million. I would, if I was representing that kid, Pete, and I'm not an agent or a lawyer, but if I was representing that kid, I'd want to see some of that money put aside. Not because the kid's going to blow it, because he doesn't get it until and unless he goes to Texas in this example. But I'd like to know the money's really there. Anybody can talk big about, oh, yeah, we're going to pay him this, we're going to pay him that. Like I said, I could name you probably 10 schools that have failed to pay athletes that they promised this big cash to. Now, I've never heard of one this big, Pete, and certainly never heard of one out 2 years into the future before this kid shows up on a college campus to play football. Yeah, he'll be recruited in the meantime and wined and dined and everything else. I remember, Pete, back in the day, if they bought you more than a McDonald's when you were on a recruiting trip, the school could be taken up on charges. Now, who knows what they can do? So back to your point, though, I think they really need to examine some sort of, if a school makes a commitment like this to a kid, that there is some watchdog at least that's out there making sure the money's really there. Because again, there's a lot of talk and not everybody walks the walk after they make that big talk.
And you and I have talked about, in some cases, we're very well aware of guys who had committed money and then the kid says, sure. And then he gets there and they never got their money. So this is not like we're just pulling this out of nowhere. This has already happened. So John makes some very good points. All right, next up, John, how about the NFL? And this, again, involves financial side of the NFL, which is perfect for you and I. You played linebacker with Chicago Bears. I played with the Vikings and the Bucks and a couple other teams and all that type of thing. So we know a little something about the pro side of it. We also know a lot about the financial side of it, even though the numbers have changed dramatically since we played. But I think Roger Goodell actually is kind of onto something, but I can also understand why the players have a little bit of pushback, John. He wants to do this. He wants to take of the three. Remember, there used to be 4 preseason games, right? Then they went to 3. Now, they're talking about possibly his idea would be let's scrap 3 games. Let's make 2 preseason games. Gives the players the opportunity to play in a game-like circumstances and everything. And that's just great. And instead, we'll just have 2 of those. And instead of just dropping everything, we'll add and get 18 games during the regular season, as opposed to it used to be, for the people who don't know this. I mean, you don't have to go too far back. It was 12 games. Then it was 16. We moved to 17. And now Goodell's talking about 18. We all know the preseason's a joke. We all know that the majority of the stars are probably not going to be playing in most of the games, if at all, in some of these games. So that's just a given. But the players' pushback is this, John. Well, you get another game, it's still the same dollars. So we're taking a pay cut, is what they're saying. And I'm not disagreeing with that, but I would also say this. There's the potential, John, that the preseason games, because of the viewership being really low and everything else, this could boost that back up again, and maybe you can manipulate those numbers around to some degree. I'm not sure what the exact answer really would be, but the players right now get about 48% of the revenue. The players want 60%. I don't think they're going to get 60%, but I think that there might be some room, even though this is not part of the collective bargaining right this second. But there's probably room between 48 and 60, wouldn't you think, as far as the revenue split?
Yeah, I would say there's a lot of room between 48 and 60, Pete, especially since we're talking billions of dollars here. And I remember sharing with Pete, folks, a video of Campbell, the coach for the Detroit Lions, talking about why he needs live hits in practice. And he was being rather emotional about it too, Pete. And he said, look, I'm not doing this as a hamburger drill. This is my words, hamburger drill, or, something where you're trying to make the kids tougher or see who's tough or whatever, and do one-on-one tackling drills from 10 yards apart. They don't really do that kind of stuff, Pete, but it is important to do live contact. And a lot of that has been written out of their players' contracts, where they don't have to do that anymore. And he's like, hey, man, if we're not doing it, then you guys, by the 6th game, you'll finally kind of get it that we need to be doing this, because the first 5 games, you're, taking some bad hits because you're not game ready. And these are all my words. That's not directly Dan Campbell quotes, but nonetheless, that is more or less, I think, the way that he views it, Pete, and I view it too. I wouldn't want to run a bunch of grown men through some of the drills that you and I had to do back in the day, but I do know that it does help to put your body in the right position when you're making a tackle, and the injuries weren't nearly as fierce back then as they are now, because a lot of these guys aren't in the right position when they're making that hit. It's not just that some of the players are much bigger and faster. It's that they're not in the right position to make that play because they haven't practiced it.
Right. It's all about game ready, right? I mean, you and I both know what that means. A lot of people probably don't. It's not basketball. This isn't hockey. It's none of those. It's football. And there's a lot of fundamental pieces that are parts of the puzzle. How to tackle correctly. Even when you're really good at it, you still got to practice doing it. So I think that that's kind of the Dan Campbell thought process is, hey, look, I'm not going to beat the crap out of you. We're not going 11 on 11. We're probably not even doing much in the way of 7 on 7, but we're going to work on some of the tackling drills so that we are in that game shape, because otherwise, John, you could go through a big chunk of the season. And if you're really only having full contact on game day, there's going to be fundamentals that are going to be lost. We've already seen it. They don't know how to tackle in the NFL anymore. It's not the player's fault. It's because they never practice it. So it makes for some interesting runs every once in a while and all the rest of it. And everybody's like oohing and ahhing over what a great running back this guy is. Well, it's because the linebackers don't know how to tackle anymore. They just run in there and throw in the shoulder, and that's about it. So I do think that Dan Campbell's onto something here, and it's going to be something, but it's also about the money. It's always about the money. No matter what, you always want to follow the money. You and I talked about that. We've got a book about that. That's the same thing in the NFL. These guys, the second they said 18 games, the players immediately didn't say anything about the games themselves being physical. They said, pay us more money. I mean, so follow the smart money, right, John?
Just as the book, folks, it's not an option. So make sure you check out It's Not an Option. If you go to the website, you can claim the book. It's $9.95 to ship it, but the book is free. So go to itsnotanoption.com. Pete and I will be back Monday, 1 p.m. Eastern Time. I hope you join us then, and I hope you have a great rest of your trading day today. See you soon.